Supermicro computer stock is crashing down, and a lot of investors are curious about what's going on with this hypergrowth AI company. The shares are trading at $21.90 as of this recording. That's down from $120 per share on a split adjusted basis just a few months ago. So, what's going on with Supermicro computer stock? Well, I'm going to try and address the issues through a conference call that the company's management team held with Wall Street investors, where they answered a lot of concerns that shareholders might have. So let's take a look at the latest developments.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So one of the things AMD and Intel are hoping for is to increase the amount of distributors are helping facilitate sales of their own GPU-based systems, and Supermicro Computer is one of those distributors that will help. They said that to complete their AI portfolio, the AMD MI300, 325, and the Intel Gaudi 3 solutions are ready to go as well. Of course, Supermicro Computer has gained a lot of publicity for its partnership with NVIDIA in helping to install NVIDIA systems combined with Supermicro Computer's liquid cooling solutions for data centers optimized for artificial intelligence. And now they're also making available AMD and Intel Gaudi solutions. That's going to help grow the business because NVIDIA's chips are sold out pretty much for the next year. And so some companies, some enterprises that want to stand up these new data centers could look to AMD and Intel as chips to incorporate into these systems, and Supermicro Computer works with these to incorporate them into these developments. They went on to say that their growth was driven by strong demand for direct liquid-cooled rack-scale AI GPU platforms, and artificial intelligence contributed over 70% of revenues across enterprise and cloud service provider markets. Remember, this is the company's first quarter 2025 fiscal results. They are preliminary results, and the management team of Supermicro Computer said that these numbers might be changed. This is because Supermicro Computer is not certain that the way it's reporting its financial results are what's required of them from the generally accepted accounting principles. And so they might have to restate their financial statements, not just for the most recent quarter, but maybe for the most recent year and maybe for the most recent couple of years. That uncertainty surrounding the company's financial statements is the primary reason that's driving the stock price down. I shared with you at the top of the video that the stock price has fallen considerably, down from $120 per share earlier in the year to $21.90 right now. One of the positives in the quarter is that the company said that cash flow was $365 million. And the key there is that it was positive. For several consecutive quarters, the company's cash flow had been negative. And I've been telling investors that out of all of the concerns you might have, the negative free cash flow for a company that's growing as rapidly as Supermicro Computer is to be expected. Because when you're generating more sales in the current quarter or in the current year than you did in the previous quarter and the previous year, you're spending more money on inventory and you're not getting the cash from customers all the time. Supermicro Computer deals with other businesses, and so when it sells its products, when it sells its services, it usually gives them accounts receivable instead of demanding payment up front. So Supermicro Computer is paying for inventory, installing it, and then waiting to receive the cash from its customers. And so that gap between when they are paying for inventory and when they're getting the money from customers creates negative cash flow, and that trend worsens if your sales are growing rapidly. So because their growth rate slowed down a little bit in the most recent quarter, they were able to generate positive free cash flow. But if their growth rate accelerates again, you can expect their cash flow to turn negative again. The management team said that in the first quarter, their net cash position of negative $200 million versus a net cash position of negative $500 million the previous quarter was an improvement. Yes, and that was due to the positive free cash flow in the quarter. So, management warning investors that the final financial results reported for this period may be different from the results reported in this statement based on the review by the new independent registered public accounting firm to be appointed. We are working diligently to select a new independent public accounting firm and complete their fiscal year 2024 audit. Remember, they're still late on their 2024 financial statements, and their previous financial auditing firm, the accounting firm, resigned. The reason they resigned, they said, because they couldn't trust the management team. They didn't believe the management team of Supermicrocomputer was giving them accurate information. They didn't believe that the management team of Supermicrocomputer was being transparent with them. And so, to distance themselves from what they believed to be inaccurate financial reporting, they resigned. And now, Supermicrocomputer has yet to find a new auditor to take their place. So, this is a huge concern for investors because you're not sure that the company's reporting their financial statements accurately. So one of the questions that an analyst, a Wall Street analyst, had for Supermicrocomputer is they were wondering if they can elaborate on if they're experiencing any market share losses as a result of their troubles with their financial statements and all the negative publicity that's coming. And then they wanted to know about the previous forecast they gave for $28 billion in revenue for fiscal year 2025. Remember, Supermicrocomputer gave this annual forecast before they faced all of these troubles. And so this analyst wants to know, should we still expect this revenue number, or should we scratch that and not even consider that now that you've entered all of these difficulties? And so the CEO of Supermicro says that the major reason why their revenue was less than expected is because they're waiting for the new Blackwell chip from NVIDIA. And then initially, they did not answer that question about the full year guidance. So this analyst had to follow up and say, and for David, on the full year guidance, please, you didn't answer that. And so the CFO comes in and says, we are not providing annual guidance on this call. So it looks like we can scratch that previous forecast of 28 billion. That does not seem like it's in place anymore. And so a new forecast may not be coming anytime soon because the company's dealing with these financial difficulties. But that previous forecast looks to be out of the question. So more bad news for Supermicrocomputer stock investors. So you can understand several of the reasons why the stock price is down by so much and why investors remain concerned about this company. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.